Welcome to Business Talk, the platform where we dissect the latest trends and insights in the world of business and finance here on businesstech.coza. I'm your host, as always, Michael Avery, and today we've got the great pleasure of hosting Garth Klintworth, who's the head of global markets at Absa CIB. With an extensive background in global markets, Garth is here to shed light on the Absa Africa Financial Markets Index, a pivotal initiative that really has gained quite a lot of traction over the last 7 years. It's all about evaluating a country's financial development based on a host of different measures. And the aim really is to show how economies can reduce the barriers to investments, and that in turn can boost sustainable growth. Garth, great pleasure to have you on the show. And I was saying to you earlier, it feels like I've aged about 10 years since last week, thanks to the box and that US 10-year yield touching 5%. How have you been keeping?
It's been very difficult. There's lots of uncertainty. One of our large global banks actually, after the IMF meetings held in Marrakesh, published a summary. And the conclusion was there is no consensus. So the world is very divided on many topics, and there are a lot of debates around what could happen. The permutations of financial market outcomes are large, but very, very few consensus ideas out there. So I think we're in for a tough close to this quarter.
Yeah, that doesn't surprise me, to be honest with you. Often on my show on radio, I get different market commentators on, and there are so many different views of where we go from here. You know, the fiscal picture for the US looks clearly unsustainable, refinancing outstanding debt at 5% and more in some instances. And, you know, so there's one school of thought that this can't be sustained. There's another school of thought that, well, you know, it has to if the Fed wants to regain credibility in terms of being, you know, resolute against the face of inflationary forces that are being pushed as well by tensions now in the Middle East. So very difficult time. I think we see it in the VIX index, which is spiking at the moment. But yeah, let's turn to this the 7th edition of the Absa Africa Financial Markets Index. Can you just share with our audience why it's of such paramount importance to Absa to consistently publish and update this index, and really what you're hoping to achieve?
So Absa is committed to the African continent. We are a systemic bank on the continent. We bring both international and local investors to Africa, or provide a way for them to exit out of Africa. And one of our responsibilities as a contributor to the financial system and society is to provide thought leadership. Africa capital market development is not something you can have an isolated view on. You have to remain connected to global flows. So there needs to be an homogeneous view to legal risks, dealing with liquidity, solvency, what attracts capital that can go anywhere in the world, what it needs to stay sticky, or be aware of what may make it vulnerable. The Africa Capital Markets Index was a way for us to engage with our investors with regard to what Africa is all about and what the opportunity is, and to discuss the drivers of the Africa capital markets infrastructure. In addition, it was to discuss with local policy setters with regard to how their markets are viewed, how they are ranked. In a nutshell, for me, when I conceived the idea of an index, I at that stage had really just one simple objective. If I could just achieve this, I believe the index would be beneficial, and that is, if the infrastructure for capital markets could be developed to the point where the risk premium that Africa pays could substantially reduce, it would be hugely beneficial for not only governments and central banks, but all the way through to the consumer, which is ultimately where the benefit needs to go.
Yeah, it's such an important concept and point that you raised there. I was in Kenya recently at an employee benefit summit chatting to principal officers and asset consultants, some in the alternative space in private equity and impact and debt funds. And it's so interesting to see even a region like East Africa with the likes of Kenya as a standout, that their capital markets are still significantly underdeveloped. If you look at South Africa, they don't even have a REIT sector just as of now. They are talking about introducing one. And so it really is critically important that as a bank that is strategically and systemically important across the African continent, that you play this role. It was a collaboration with OMFIF back in 2016. Tell me a little bit more about the partnership approach that you've taken and how that underscores the independence and the reliability of the index in the eyes of the financial community.
Yes, so it was important that we had a credible, independent third party who could vet the data and the findings that produced the index. Absa saw the leadership requirement that was necessary for us to succeed, but we had to make sure that this wasn't an Absa view only. For it to gain the gravitas and for it to be credible, you had to have someone who could be independent to put forward the case of where you are ranked in the index so that the index remained credible in all eyes of investors and local authorities.
And, the chairman of OMFIF, David Marsh, was hugely complimentary of the partnership so far and what it's delivered. So clearly, you're striking the right notes and right chords. In terms of the coverage, you really do boast an extensive coverage of African markets. Can you just provide some insight into the scale and the depth of this coverage and why it's vital for the index to encompass such a vast array of countries as well?
Yeah. So when we started the index, we were limited by budget. It was a new innovation. We also wanted to focus on the largest contributors to the economy of Africa or the GDP of Africa. So we selected what were our home markets, which are those large markets. And the index received credible attention. And it actually went to the African Union. It was used by central banks in various African colleges. And other countries said, well, what about us? Namibia, why am I left out? Even countries like Rwanda, which have done other amazing things. And so what we found is that other countries saw the value of what was going on. Investors also asked about the other countries. And as a result, we found other sponsors too to contribute financially to the data work that's required to produce a credible index. And I certainly welcome the extra incumbents that have been added. I think it enables everyone to understand the continent better, which ultimately is the best thing to facilitate regional trade.
Yeah, with the African Continental Free Trade Agreement recently reached, we see that there's a significant political alignment as well. And you mentioned the African Union. But again, I almost feel like the underdevelopment of African capital markets is one of those non-tariff barriers that we need to address and sort out if we are to fully exploit the potential that we do have. And if you look at the release this year, the African Financial Markets Index for 2023 notes an increase in overall scores for the majority of countries surveyed. In your view, what are the key driving forces behind what looks to be a very positive trend?
Yes, so look, the bulk of the positive movement in the index really comes from macro factors like a reduction in inflation. So we're coming off a base of macro factors that were penal in prior years, and the outlook seems to be positive, and as a result, that lifts the index. But the pillar that deals with legal agreements and the ability to transact with confidence under contracts and frameworks has also found lots of development, and it was scored well in that category, and that also helped the index rise in a very difficult backdrop.
That is so important because often I think the misconception around Africa is a contractual risk, legal risk that maybe goes alongside with the political risk. And we have seen that very often that isn't the case, that you do have certainty of legal contract in many of the markets that you covered. I think a lot of that is also encapsulated in ESG factors. And while I know the ESG theme certainly came off the boil from a fundraising perspective last year, I think anyone can quibble with the fact that companies need to and investors need to think about the environment. They need to think about the social impacts of the companies and investments they're making and the governance frameworks. And so it's important. They might call it different things in the future. I know there's been some greenwashing, but I think I'm certainly a believer in an ESG factor approach to the way we do things. And the index highlights that 20 of the 28 African Financial Market Index countries now incorporate ESG-linked financial policies. Can you just shed some light on the significance of that integration and its impact on financial markets in Africa?
Yeah, just before I get to ESG, which is a foundational principle for future success, can I just recognize the work that's been done in the legal framework? Before we can even do a bond or anything that's ESG related, the basic premise of your contracts is that the law's been tried and tested, and that investors can actually believe that their capital has a form of protection or clarity around how the capital will be deployed. And historically, African countries myopically looked at their legal frameworks and built very specific laws around solvency or contractual agreements that actually were in contrary to things like GMRAs, global repo agreements, or securities lending agreements that meant that you couldn't transfer risk from a country into international countries which had adopted all these others, netting frameworks. And a huge amount of work was done on that basis to enable risk transfer and therefore the deployment of capital to be better managed. Now that that is gaining momentum and has credibility, and we're moving to an homogeneous way of dealing with legal contracts in the financial market, we can then focus on the more sophisticated product development like ESG. And I think Africa will probably in general be at odds with the developed world because the priorities of Africa are so different. The case in point is I don't think Africa can get onto renewable energy as fast as the European counterparts would like. They're going to have to unfortunately stick to using fossil fuels to create employment and everything else that's important in the ESG continuum of demands. And so you can easily focus on the points of contention. But I'd like to say that, a lot of the countries, as you say, have policies now. We've got 9 products coming from different countries. Some countries have been extreme pioneers. We've done gender-based bonds. And given that the bulk of Africa is about business banks, small enterprise frameworks, a lot of innovation has actually happened in the housing market, in women needing capital for businesses. So there's actually quite a few success stories as well within Africa under ESG, where we've actually been effective and deployed programs that ESG demanding capital can find a home for.
Such a good point you raised there, Garth, on looking at the ESG factors through an African lens. And I think here you can't say in a broader sub-Saharan African context where 600 million people are living in energy poverty that all of a sudden now we need to ignore the opportunities that are present in oil and gas, for example. I was recently on a trip to Swakopmund, and the development around Swakop, Walvis Bay, and the excitement around those recent oil and gas discoveries are palpable. And the sense of the need for energy security and jobs are hugely important. It's going to, again, I mean, these can be contentious issues, but I think if at least we have policies and they're framed in the correct way, and there's a plan for how Africa does this at Africa's pace and given Africa's constraints, then at least we can have a much more mature and honest conversation. I think just painting everything with an E and greenwashing, it certainly doesn't help. So I'm very pleased to hear that. There were some notable declines when you look at areas like liquidity, the size of domestic financial markets, and pension assets. That's a bit of a concern, and I guess not that surprising given how much pressure markets have been under. What factors do you believe are contributing to these declines, and what implications, importantly, might they have for these markets into the future?
So I think there's a couple of reasons, but it's simply the pace at which global interest rates rose, and to the extent that they got to, which caught everyone by surprise. The vast majority of Africa trade is still done in dollars. Africa generally runs sometimes both current account and fiscal deficits. So if you just look at the Eurobond market in the last 10 years, it's exploded. The number of issues that have happened, countries have raised a lot of hard currency debt, and it comes at a time when there's a huge amount of inflation. And with that inflation, the rising cost of living and the support required by fiscuses in Africa that are now burdened by very large increases in interest bills, I think has really caused a deterioration or a concern around the credit outlook. I think geopolitical concerns have also not helped financial markets. And so any country that has what I'd call a sub-investment grade credit rating has basically come to a stall. The confidence for people to trade in and out supply dollars into a demanding region has become more difficult than in prior years, and that's absolutely negatively affected liquidity, and price discovery therefore has also deteriorated, and it just becomes a negative spiral that feeds on itself.
Yeah, and back to Kenya as an example, recently slashing its budget across the board by 10% to deal with some of the fiscal pressure that all of those factors have placed on the Kenyan economy. William Ruto has a tough job there. And given where we are, given how the Fed has increasingly signaled that it's determined to keep rates higher for longer, certainly don't see it lifting in the foreseeable future. Were there any specific AFMI countries that stood out for you in this year's assessment? And if they were, what attributes or developments were remarkable?
So a country that might get overlooked just because of its sheer size, if you look at the history of Seychelles, it's raised, I think, or increased the most in the prior years. And that's because they've actually taken the development of the financial capital market infrastructure quite seriously. And I remember a couple of years ago, it was quite difficult to manage foreign exchange risk in Seychelles. And despite COVID and now post-COVID, because of the development that they've done, Seychelles has actually done really well. And I think there's a lesson there for other countries that if you focus on the right things, your position in the index will move favorably up. And it has to have a positive impact on capital supply, liquidity, pricing, transparency. And then that's the other side of the spiral, which feeds itself. Other notable countries, Namibia, their large savings base. I think the world where it's going, given the fiscal constraints, is hugely important to have savings. I think also the fact that Uganda has done a lot of work on the legal frameworks in their country has helped them. And so as a result, there's increased investor confidence in the ability to move capital there. So I think that, you've got to go into each country's story and you'll find an area that they've worked on and you'll see a direct correlation and benefit from it. I think the next step for the next few years is for banks like ourselves or anyone who wants to provide thought leadership into the independent research done is to say, okay, so what's next? What do you really need to prioritize if you want to actually move up the index? And I think that's the work that we'll start doing with individual countries and areas to help them progress their financial markets infrastructure.
I think it's a great way to end off then. I mean, given that, do you see that being your focus for the partnership with OMFIF into the future, bringing these kinds of building blocks to market to say, right, you've done well here as a country, these are step A, B, and C to now move you up the rank, up the ladder, up the rung, so to speak. How do you see that playing out?
Yeah, I think what we'd like to do is, now that we have years of rich data, we've got enough time to look at trends, taken our knowledge of the global markets, our research, is to actually bring it together with this product and actually say, what should the focus be for each country to be a catalyst to make sure that their development happens faster than maybe in prior years?
Well, that's it. Catalyzing capital markets, I think, is a great purpose and mission to have. Garth, thanks so much for those really interesting insights into the Absa Africa Financial Markets Index and its impact on the financial landscape in Africa. Evidence that clearly we're starting to do the right things, but it's about consolidating those gains now during very difficult and trying times. That's going to be the real test. Take care.
Thank you for the time.